Hello everyone, today I want to talk about MACRS Depreciation. And before we talk about MACRS Depreciation, I think it's important to understand what depreciation is. Depreciation is an income tax deduction that allows a business to recover the cost of certain property. It is an annual allowance for the wear and tear, deterioration, or obsolescence of the property. Most types of tangible property, such as buildings, machinery, vehicles, furniture, and equipment, are depreciable. Likewise, certain intangible properties such as patents, copyrights, and computer software are depreciable or amortizable. But we're not going to talk too much about amortization. We're going to talk mostly about MACRS depreciation. So let's talk about MACRS depreciation. The Modified Accelerated Cost Recovery System, that's what it's called, MACRS, is the current tax depreciation system in the United States. Under MACRS, depreciable assets are divided into separate classes that dictate the number of years over which their costs can be recovered. So for example, depending on the class life, that's the amount of time that the asset can be depreciated over. Each MACRS class has a schedule that specifies the percentage of the asset's cost that is depreciated each year. For example, computers are depreciated over 5 years, and office furniture is depreciated over 7 years. The MACRS class life table is 5-year property, 7-year property, 10-year property, 15-year property, 20-year property, 25-year property, 27.5-year property, and 39-year property. Assets that fall into the 5-year property class life are computers, office machinery, small aircraft, automobiles, taxis, buses, and trucks. 7-year property is office furniture and fixtures, grain bins, cotton gin equipment, used agricultural machinery and equipment. Assets that fall into the 10-year property are vessels and water transportation equipment, trees or vines bearing fruit or nuts. Assets that fall into 15-year property are land improvements such as fences, roads, and bridges, municipal wastewater treatment plants, qualified improvement property. Assets that fall into the 20-year property are certain farm buildings such as pole barns, machine sheds, and multi-purpose farm building. Assets that fall into the 25-year property are certain municipal sewers, water utility property, including property integral to the gathering, treatment, or commercial distribution of water. Assets that fall into the 27.5-year property are residential rental property if more than 80% of its gross rental income is from dwelling units. It also includes escalators, elevators, if installed inside the residential buildings. And 39-year property, assets that fall into 39-year property, are any non-residential real property, such as office buildings, stores, commercial malls, factory buildings, and warehouses, also known as Section 1250 property. I think it's important to note some of the different depreciation methods, such as straight line depreciation, which is usually known as the cost divided by the useful life. So if you had a cost of $25 and the useful life was $5, it would be 25 divided by 5, and that would give you your depreciation. There's the double decline balance method, which is important to understand. And I think that really sums it up. Now you know more about MACRS depreciation, and I hope you feel more comfortable using it.